Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa with your Sunday night, September 8th market recap video. As you can see here, we've got corn, soybeans, and wheat fractionally higher on the overnight. I'm going to go ahead and get it started off with a disclaimer. Just remember that everything I say here is just my opinion and that there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. All right, as you can see here, we're a little bit higher on some short covering here from the weekend. We got corn up 1.5 cents at 3.57 on the December contract. November soybeans are up 2 cents at 8.59 3/4, and D Chicago wheat is up 0.5 cent at 4.64 1/4. I'm going to go ahead and get it started off with the charts here. I'm going to go ahead and take a look at D's corn. Had a really decent sell-off here this last week. We took out new contract lows here on 3 separate occasions, and we're sitting right at those. Right near those contract lows here. I've got the next area of support at 351. So far, the low for this move has been 353, so we're starting to see some bottom picking type of action. Still no signs of a reversal yet. The market is still oversold, but there's no fundamental reason to find a rally here. We've still got the market struggling with demand. Whether that be from ethanol or exports, both have been poor, and with the SREs, the ethanol demand is questionable. And with that being said, too, on the supply side, the weather has been, pretty bearish here. It's been pretty supportive of the late maturing corn crop to develop. So, we've still got a warmer bias and a wetter than normal bias for the 6 to 10 and 8 to 14 day forecast here for the Midwest. And, it looks like at this point there's going to be a pretty decent finish up to the crop here. So, with that being said, I think we're going to see some resistance here between 363 and 3/4 to 365 or so. I think there's some pretty good resistance in there. So I think rallies are probably going to be limited in the short term to that. Other than that, I think we're going to try and go down and test this 349 to 351 area. We might find some short covering there, but really just corn needs a fundamental catalyst. They need something to change fundamentally for them to rally significantly there. On the soybean side of things, kind of a little bit of the same story. As corn, really just, soybeans, they've been struggling under the lower exports that they've seen. Traders are still not very excited about buying beans just because of the trade war and the African swine fever and just the demand concerns from that. I guess, really they've just been led by the meal market, and the meal market lost the key 295 support level there in the D's contract. So, and when you look at meal, which is the one that's been the contract that's been leading here, we got that close below that 295. We tested it we tested about 8 times here. And got that close below there, and that's what soybeans have been following here. Meal had been bidding up. They tested that $300 psychological level just a couple of times here this last week, just on the idea that the Argentine farmers, as their currency collapses, that they might be hanging onto their soybeans more. So far the U.S. meal market hasn't really caught a bid here. So. Soybeans are still being led by meal, and it looks like this 855 level is the area they're respecting as far as the NOV contract goes. If we break below that, they're probably going to test out this 845 region. And I think we saw the rallies higher stall out at 870 and 880. So I think you've got some pretty good resistance and some good sellers up in there, just between that zone between 870 and 880 in the NOV contract. So as far as the leader goes in soybeans, I think it's the meal market. So. Something to keep an eye on there. We got D Chicago wheat. We've been short covering here pretty good. I guess we've come off this 453 low, right around 17 cents there. So we've seen some decent short covering. We've got the market higher here on the overnight higher to unchanged. The world is still flush with wheat, and like the FSU and Russia and the EU are all competing for the world export market, and they're just driving their the prices that they sell their wheat at lower, and the U.S. is nowhere near competitive. So I think until we can get a little bit of a change in our export program, and I think maybe couple that with a lower dollar, we're probably not going to see a very significant rally here in wheat. With that being said, though, we are near this low here that we made in May. So kind of like the corn market, we're back to where we started. I guess if we see a rally, I would like to see this the low 470s in there, and I think that would be a very sellable rally. And if we do, continue to sell off, we'll probably lose this 460 region and head back down, test out that 453 low, and then maybe go down to this low here that we saw in May, the contract low at 442. So not looking very good for the wheat market there. Cotton market, really just been a two-sided trade here essentially this whole month. Basically since August into September here, we've really just ranged between the $60 mark and $57.50 to $58. And really, just there's two sides of this story. The bulls in cotton want to be bulls because of the yield damage done in Texas from the hot and dry weather here this last month, and the bears are just still, they're still selling this market here based on the higher supplies and the trade issues with China and the lower exports in that respect. So really, kind of a two different stories working here, and what you get is just a big sideways trading range. So I would look for a break above the $60 mark or a break below the $57.50 mark to signify where this market wants to go. I think a lot of it's going to depend on exports and the possibility of future exports, regarding the dollar and economic conditions as well. So something to watch there. Going into livestock here, we really saw the cash market and cattle collapse here. We had, we had bids of $3 less than last week being taken last week. So, I think we've really seen this market fall out of bed here, and it's still over the kill capacity concerns of the industry from that Holmescomb, Kansas plant fire. So I think we're going to see some some support in here at 94.30. That's a long-term weekly target, and then there's some support down there at 91. But as far as cattle goes, it looks like they haven't found a bottom yet. If we do get a rally in here, I think we're going to find resistance at the $98 mark. And the hog market kind of along the same respects here. They have also seen the cash market fall off pretty dramatically here. Exports have been higher to the Chinese as far as the boxed pork goes. So that's something that the market was expecting and that they've seen, and I think the traders just kind of have sold a fact in there and on those higher exports, and the exports have not been good enough to justify a big rally in the hog market. I think when that does happen, we'll see a really significant rally here, but at this point, we're really not signifying that. I think if we do fall further, we've probably got good support down here at $62 to $61.50. If we rally above here, I think we've probably got resistance at like 66 and then 68.70. I think the 68.70 mark is kind of my breakout level, and the 61.50 to 62 is kind of my breakdown level. So that's all I got here. If you guys have any questions, feel free to let me know. You can give me a call at 712-262-7606. You can visit me online at aa-commodities.com. Thanks.